This is the Independent Dealer Podcast. Education by dealers for dealers. Now, here are your hosts, Luke Godwin and Jeff Watson.
Hello and welcome to the Independent Dealer Podcast, brought to you by Buckeye Dealership Consulting. This is different.
It is different. You and I are together.
And I can actually punch you from here when I want to digitally punch you.
He had on a t-shirt earlier and he looked like a muscle-bound freak. And so I wanted to make fun of him, but then he put this on. And
He's doing push-ups.
He was actually on the floor in this coffee shop, pumping them out.
Yeah.
Let's go. And this is Garrett.
How are you guys doing?
Great.
Garrett, thanks for letting us take your time.
Yeah.
We're excited to be here. Introduce yourself to the podcast community. Where are you at? Where are we at?
We're in Houston, Texas, right off the 610 Loop, if you're familiar. I own and operate a dealership called L Boulevard Motors. We've been in business since 1972. I'm a third-generation owner.
We are here. We're not currently in Ella Boulevard Motors because they got a lot going on, getting over a snowstorm. So we walked across the street to a little coffee shop, which is really awesome. And what a really neat location he has. Very retro, and I just love it. I love I love old gas stations. And a third-generation dealer. It sounds familiar.
Yeah. Our dealership, the building itself is probably early 1940s. Dealership started in 1972. Families owned and operated dealerships back into the 1950s.
Wow. That's, essentially my story.
Yeah.
And Garrett and his dad still work together. And we met Fred, and really cool guy. But he is still sitting in the dealership every day.
Yeah.
My dad,
6 days a week.
Yeah, my dad definitely would not allow him in the dealership.
Well, not to say that there isn't some thoughts there around that, but I look at it from the perspective of what else are you going to do? And my mom will probably drive you nuts, but it keeps him sharp. Keeps his mind sharp.
We're good.
That's awesome. So the dealership has been around for a while. Your grandpa, your dad, everyone's been operating it.
Yep.
When did you step into it? And how's that been? Because we always talk about that, right? The second, the third generation coming in and kind of taking the reins. Sometimes it's really hard to tear those reins out of your dad's hands. How has that transition been? How long have you been at it, and how's it gone?
Been at it for about 6 years. Came from the private equity industry, investment banking industry for almost 10 years, and wanted to learn how to operate a business. And when I came on, there was a lot of reluctant thoughts there, as I wanted to come in and hard charge and change things on the spot, on the fly.
But that's the private equity model, right? Just
Correct.
come in and change everything.
That's right. That's right. Buy it out, strip it out, and move forward. Right. But it's been a good transition over the years, and we've implemented some things that I think that if they didn't take place, the business would have ultimately failed, especially through COVID.
So let's talk about that. When you got here, and you're a buy here, pay here dealer, a lot of people that listen to it are buy here, pay here, but a lot of other dealers just like to hear. How many accounts did you have when you got in?
Probably like a little under 150, 140 accounts. So somewhere in that range.
And so I think you said this morning around 230. So you've grown about 100 accounts?
Yeah, roughly 230, 240 accounts roughly.
Okay.
And we are not strict buy here, pay here. We're a hybrid model.
Okay.
So we're a hybrid. I sell about 25 to 40% cash cars every month. And I'm not in the finance business. I'm in the cash flow business. I like to make that argument all the time. If they want to come and buy one of my most expensive cars for cash, I'm unloaded.
So I've always thought that if you got a car to sell, I'm in the car business, and somebody wants to pay me cash for the car, I'm going to sell it.
Myself.
But that's funny you say you're in the cash flow business, because a lot of people out there in the buy here, pay here business, we're in the cash unflow business. And so that you look at that way and bringing the private equity mindset into that sure will help you grow.
Correct. Absolutely.
What were some of the biggest things you felt like you had to tackle when you got the reins or when you started digging into it? What were some of the things where you said, hey, Pops, like we got to modernize this, we got to change this, we got to alter this? Anything stick out to you?
Cash payments. They had no system in place for taking credit card, debit card, ACH, anything like that. So
were they just tracking payments on like a little ledger 3x5 card?
Yeah,
when I took over from my dad, right before that, switched him to a computer system first time. And actually it was my dad's idea. And he had done the research, and there was one little local guy in town that did it. And we did, but back then you still all cash payments. And that actually brings up one of our sponsors, Blytzpay. Now, Garrett, you said you're not on Blytzpay, but we're going to get you switched over soon. But Blytzpay helps people modernize their payment processing
Yeah. What did you guys go to when you stepped in and started? Did you just go get a Square app? Did you add an entire DMS? Like what were
So
the steps?
we
and how
actually
did you do
use a
that?
local Texas DMS, which is Auto Action. They're great. Their customer service is amazing. I would like to see them do a lot more, and I know that they're capable of it. They recommended we use Repay.
Mhm.
We went all in with Repay, and that has been working out really well.
So you already had the DMS
Correct.
in the store. You didn't have
Yes.
to add that
No,
and
sir.
convince your dad. Okay, it was
Correct.
there. He just hadn't turned on any kind of a merchant in.
And to the capabilities of what the DMS was using or had the options capable of, he might have been only using 25% of it, right? So now we
Yeah.
are really using the full capability of the DMS system.
That's interesting because I think for a long time there were a lot of state-specific DMSs, and it was easy. And Texas being a place big enough to support something like that. If you ever, I mean, do you think about switching to a larger? Is it cloud-based or
Yeah.
or not? So do you ever think about switching to a larger DMS?
Yeah.
And we have no DMS sponsors. Anybody out there wants to sponsor us a DMS is worth the crowd.
I've looked at a few, but again, it comes down to the customer service that I get with Auto Action. That really keeps me on board. And are there some things that I think could be a little more fluid? Yes, but at the end of the day, that isn't going to get replaced with the customer service aspect.
Yeah,
that is such a big deal, and customer service is such a staple in the buy here, pay here business. I tell you, there's vendors need to be listening to this right now, because if your customer service isn't great, it's really easy to switch, right? But
yeah,
Blytzpay's customer service is great.
yeah. So what else did you change when you came in? You added some payment processing to the DMS situation. Did you change the model? Because I know obviously all of us back in the day, it was like, I got a $3,000 car. I'm into it $3,000. I need $3,000 out of it to roll it. You know, we were getting our full
Down payment, right?
Yeah, we were getting our full cash out of the car before we put it on the street.
Correct.
Did you change the philosophy of how the deals were structured?
Yeah, I think that the ACV increased maybe slightly, a couple $1,000. We lowered the down payment, maybe a couple $1,000. We were notorious through the years of getting monster down payments that would essentially bust us out of the car, even into the profitability range. Whereas now we're, maybe 20 to 30% of the ACV is your down, or 15 to 20% of the sales price is your down.
Did you change it because you had to? Or
Yeah,
do you
of course.
feel like that your dad was losing sales?
We were losing
Because
sales.
obviously everyone would love to stay with the old model.
Correct.
And there's probably some dealers out there that will still hold to it.
We were losing sales, and it was flat out on, obvious when a customer would walk on a lot, look at a $10,000 or $15,000 truck, and we would want $3,000 or $4,000 or $5,000 down payment, but they didn't have that kind of money. They had 2,500 down, but they were good credibility buyers.
Well, we even talked about it this morning, Garrett, and I still, you talking about wanting to grow to 400 accounts, and I said, we started talking about your down payment. I said the first thing you're going to have to do is lower your down payment again. When you lowered that down payment,
Not the first person to tell me that.
yeah,
I've got a few guys in my camp that are saying, you got to lower that down, because our down payments are still astronomically high compared to the industry average.
So if you look at your average down payment is probably similar to my average down payment. My average ACV is $13,000. What's your average ACV? 6,500. So, if I had the same down payment percentage, I'd be getting $4,000 down for my cars.
Right.
And I can tell you, I would sell 0 cars a month if I had to get $4,000 down. And so if you look at your first growth initiative, I think it would be to lower your down payment some.
Sure.
How do you feel about that? What does that make you? Does that make you scared?
It's cringeworthy, right?
Yeah.
But the thing is, I'm looking at it from a qualitative, almost even the psychology of it. If certain markets are different than other markets, and I'm a firm believer in that, what's done in Houston is not going to be the same in South Carolina. It's not going to be the same in Colorado or Illinois or Utah. I personally think they have the money. I'm working on lowering the down payment, and you miss 100% of the shots you don't take. So ask them, say, hey, I can get you in this car for $2,000 down, but I'm going to hit you with a $500 quick one. Or I can get you with this for $1,500 down, but I'm going to hit you with a $750 quick. And so I push and push and push, and ultimately they will agree. Or if they are really good credibility buyers, I will go ahead and roll the car and just go with it.
I think we all lose deals. Not all of us. All of us who are used to down payments lose deals over a $500 difference in down payment.
Correct.
And I was talking to Chuck about this during 20 group, probably 4 or 5 years ago. And this is what finally made me figure this out. Luke, Chuck asked, Luke, what's the difference in $500 down payment? I said, well, it's a lot. And he said, it's a 1 month payment. That's it. If you can get that car on the road earning quicker, that $500 comes in really fast. And it's almost a mentality switch that has to go off in your head.
Right. And that's kind of that's a great point, Luke, because over the years, the 5 or 6 years that I've been aboard and took over everything, our down payment has come down by 50%.
Yeah, I mean, and then you got to give Garrett credit where he was getting half down before. Now he's getting 25% down. It might be a while before he works to 10% or 5% down, like us guys have settled for.
and you know, and I'm not arguing for lower down payments at all. What I'm arguing is if you need to grow, that's probably one of the first. That's one of the first triggers you can pull.
Talk to me, Garrett, about other changes. What about compliance changes or like regulatory? Did you go in and say, whoa, Dad, like we don't got buyer's guides on everything. We don't have arbitration agreements. We don't have GPS disclosures. We're not calculating interest, right? Was there anything like that kind of hit you as an epiphany when you got in?
Yeah, I started recognizing there was a lot missing from the deal jackets that I felt like should be there from a regulatory perspective. And not that the family didn't have the knowledge. It's that they just didn't think it was necessary, or maybe they didn't know to do it. Right. Yeah. They understand the legality behind it. And to my family's credit, especially my dad's credit, he ran a very good shop, but he kept it small by design. Yeah. I'm a little bit different because times have changed.
Yeah.
I reached out to Steve Levine at Ignite, and he did a couple of deal jacket audits and said, maybe you need to incorporate this, and this. Here are the window jackets. Make sure that these are in all the cars, etc. Right.
Yeah, and thanks for bringing up Ignite. Ignite's a sponsor of the podcast. They do great things, deal jacket audits, and we were talking at 20 Group about credit reporting, and some people do report credit, some people don't. The auditing of your credit reporting is something that I argue every dealer should be reporting credit by your payer, and if you are, they have a great system to set up that auditing. So reach out to Steve at igniteconsulting.com.
Yeah. He did my deal jacket audit, and I go back regularly every couple of years and say, hey, we'll audit this, make sure I didn't miss something, make sure that I got some button that went ski-wampusy in my DMS all of a sudden. Like, there is stuff. And then you extrapolate that over 2 years worth of deals.
Oh, yeah.
You got a lot of potential exposure. You're not staying on top of it.
And even your website auditing. If you want to talk about something that can be scary, if your website is offering something that you don't necessarily audit, I mean, it opens yourself up to law.
He did that for us as well, and it was great. And that really took over when I switched over to dealer parts.
You ever seen these ADA lawsuits for websites that aren't ADA?
Oh yeah, that's ridiculous, right?
I don't know
how could your website be handicapped anyway?
But it's not. You're gonna get sued for it.
It's not, right? So, but Garrett, I came from a family business as well, where our dads, they did it the old way. They just didn't. They just didn't know what they didn't know. What kind of pushback do you see for that as a whole of hey, I still want to do it the old way, and you're wanting to do something a new way? Do you still get that?
No, not as much as originally took place, but I think it's a little bit of a hybrid buy-in because we are truly partners together, and I respect everything that he has to say, especially when it comes to cost of recon, et cetera, when it comes to the cars. And he relies on me from maybe treasury management, buying cars, as well as running the sales aspect of it. And then just the overall operations of the business. Because I want him to step away and enjoy his life and take some time. But at the same time, he's a stubborn old bull. And sometimes you can't, their work is never done.
Yeah. Right? Yeah.
So their work's never done.
When you decided that reinsurance was a good thing and you wanted to put that in place.
What's that?
I know your dad had a little pushback on that. How did that conversation go, and how long did it take from when you first said, "Hey, Dad, we need to be doing reinsurance," to when you actually got it going?
I think the key with reinsurance, and I am with Buckeye Dealership Consulting. I think they are the absolute best. I got a visit from a guy named Jason Goswell.
I know that guy.
You know that guy? Randomly, and it was a recommendation from another guy that we all know named Russell Moore. Russell Moore has been a mentor of mine, loosely, I guess, if I could call him that.
Yeah, I'm sorry you had that. Yeah. That's a mentor.
For years. He was one of the first phone calls I made. He said, you need to reach out to Jason. So I reached out to Jason. Jason stopped by the shop. The thing with setting up a reinsurance business is you need to start slow. Don't hammer on every single product right out of the gate.
Yeah, because you don't know what you don't know.
Exactly. So leg into it. Dip your toe in the water. That may not be what they want to hear, but that's the right way to do it. And I can be a great case study there because now my reinsurance account is fairly, got some dollars in it, and it's got some sizability to it. But that's not the important thing. Is the risk factor is significantly reduced. I started with GAP, moved to CPI, moved to warranty, moved to VSI, and I actually just got off the phone with Stephen Carter a couple of days ago, and Bill Elizondo was at my shop last week and talked about VSC.
So, what was it? Did your dad? Because you told us when we were at your lot that your dad wasn't ready for that, or didn't trust it. What changed in his mind that allowed you to talk him into that?
I think the amount of risk that we were taking from an insurance perspective on the cars we had out on the streets.
Oh, CPI portion.
Correct.
And the GAP portion.
GAP and CPI, because we were getting smoked left and right with people that were telling us they had insurance, ultimately didn't. Total loss accident comes along, we're left holding the bag. And that's one of the biggest things that I fight every day is I don't want to be left holding the bag. I didn't sign the contract, they did. And that's just me operating from like a business mentality, right?
What did you bring from the private equity career you had into the buyer payer space or into the dealership space?
I think the understanding of the math, right? You have to be very, very good at the numbers and know them backwards and forwards to really understand what you're getting and the value you're getting from a finance perspective, a risk perspective, and understanding what your interest rates are doing. But, we're in the risk business. So when I think about Buckeye, we're already controlling the risk on the notes, right? We're financing costs. So there's inherent risk there. And you're borrowing from somebody else, or maybe you're not, maybe you're some.
Or you're borrowing from yourself.
Correct. Exactly. Right.
Family. Yeah.
So with Buckeye, like, well, man, if I have this risk, I might as well own the risk of the insurance as well and control the entire process.
Yeah, our business.
And that's kind of the takeaway I had from my prior.
Yeah, our business is math and risk. And there's so many dealers that get into our business that don't understand the math or the risk.
Right.
And it's way riskier than the math would tell you.
Yeah.
What do you tell a dealer who is in the car business now and thinking, okay, I'm going to go into the buyer payer space and doesn't have a lot of cash to do it, and definitely don't have the education you have to do it? How do you fix those two? Because my dad had that problem. He couldn't meld those two.
I think operate much slower than everybody's telling you about. And don't believe everything you hear online or at the conventions. I mean, there's always going to be another mousetrap that's a better mousetrap, right? Just do it your way, make sure you're profitable, and slow growth is always going to be the key to it.
I think you can't drive that home hard enough is slow growth. I think people who I've never really, I think I've seen less dealers have major issues because they grew too slow as opposed to the ones who grew too fast.
Correct.
Right.
It's hard to screw up if you go slow enough.
If you go slow enough, it's like driving in ice, right?
Yes.
It's like us this weekend.
Yes.
We're out here driving around Houston on snow-covered roads. Just gotta go slow, man. Everyone will be fine.
And
Just slow down.
there's some things to that, right? Like, I wish I could wake up and be at 500 accounts tomorrow. Yeah, that'd be awesome. Is it realistic? No. Now it's 10 years down the road, 500 accounts realistic? Absolutely. And I've got a lot that's pushing that direction, but that's the way you got to play it,
Yeah.
right? It's, try to add 40 or 50 accounts, slow it down. Try to add 4 or 50 accounts, slow it down. Learn to manage at different levels those number of accounts before you jump up to that next level. Because I've heard some stories at some of these conventions, and the guy's bragging and he's going, I added 150 accounts this year. I'm going, good luck surviving next year.
Yeah.
I don't understand how they do that.
Yeah, we were talking, Jeff and I were talking last night in the hotel about a dealer that is growing really, really fast. And they have cash behind it, but you worry about it. Because you don't know what you don't know, and you don't know how bad the risk is until you slow down and take a breath and collect some of it.
Correct.
And that's what maybe some dealers do, is they grow so quickly.
Yeah. You haven't proven your underwriting.
Oh
You
man,
haven't proven your
collection strategies, all these things, and your inventory strategy.
Well, your repo rate's going to go up as well.
Oh.
Right? It's going to skyrocket.
And if it's high to start with, it's only going to get worse. But
Right.
Inventory strategy. We were out there looking at your inventory this morning, and you're selling a bunch of Toyotas and Hondas. And I think that's a great inventory strategy that leads to lower charge-off rates, better collection rates, and better customers. And if you do repo it, a higher higher ACV when you bring it back in.
And on the flip side of that, we had a phase where we all learned that the the Equinoxes and the Traverses were not great for us, right? So had I stuffed my entire portfolio with Traverses and Equinoxes back in the day, I'd be paying the price now, right? So that's another lesson of slow growth is just the quality of collateral that you're putting in your portfolio. You know, as your buying habits change, or as the market changes, or as certain makes and models prove themselves out, that's good buy here, pay here.
Has there been any change in your dad's strategy to inventory compared to yours?
No. I mean, I almost lean more on him as to what's going to be reliable and outrun a note than vice versa. Because again, he's the expert in terms of being in the business, being a mechanic for the last 60 plus years.
Yeah, I mean, we were sitting there and there's a CRV that Garrett can buy, and your dad walks in after doing a quick inspection and says, "Hey, it needs this, this, this." I mean, literally, the car was on the lot a second ago, and your dad already has racked the car, looked at it, and told you exactly what it needed.
Yeah, absolutely.
I mean,
how much money we're going to put into
that's
from
really,
a recon perspective.
That's really neat. Really neat.
So before we wrap this up, let's ask that question. You know, we talked about what you brought to the table and what you changed, or the improvements you made to your dealership. What would you say the lessons you learned from your dad and coming into the dealership and having that first and second generation, already have built a foundation for you? What do you feel like were some like epiphanies or aha moments for you coming in that maybe your dad has passed down to you?
I think that goes with anybody that's a second or third generation owner is that you may have the education, the background, you may understand the math really well, but there's something to be said for having time in the seat. And there's an education behind that. And I think that needs to be well respected, right? And it doesn't necessarily mean that there's not going to be some internal discussion or even, minor arguments here or there, but you gotta listen to what the old dogs are telling you. They've been telling you for a reason. And although the math may not make sense in your head, they're trying to protect their underlying portfolio. And that's something you got to really understand and take to heart when money's involved.
Yeah, true. One thing I want to do also before we wrap up is talk about his location. An old building in a great spot in Houston here, but it's a retro building that I just love it. What does your future look like at this location? And you actually talked about your dad purchased some property years ago. That sounds like it'd be a really good location too, but it's currently.
So we have a second location that's already built out. He bought some land about 10 years ago. We developed it. It's ready to go. We have a renter in there. It's an oil field service company because we're in Houston. The location here, it's a retro building from the 1940s. It's time for some updates, and we're going to take that into account this year and over the next 2 years to get that up and running, because I've reached out to certain individuals across the space, and they tell me that everybody says the same thing. I hate hearing it, but they all tell me the same thing. It's like, well, if you update your building, you'll get a little bit better client, you're going to get a little better customer, they're going to feel a little better walking through the door. So it's a necessity. It's not necessarily a want. It's a necessity.
Well, that's one thing you bring from the private equity firm and those that are in commercial real estate is, you've got to put aside capital.
For those improvements.
You have to have that put aside 2 to 3% every single year for those improvements that are going to come down the road, right? And you can't just wait 20 years and then be like, well, now that it's falling down, or now that our image is different in the community. So to your point, it's great. A facelift, a fresh coat of paint, some upgrades here and there, I think do go a long way.
Yeah, new lights.
It's happening all around you in this neighborhood.
It is. I mean, this place is gentrified like crazy and looks beautiful. Is this something you see yourself doing very soon? I mean, how? Because I've done this. How do you go through a refresh and still keep your business open? And
that's a question for the ages. I'm trying to figure that out. If I have to rent an Airstream and park it in the back, right? I'm gonna do it style. I'm gonna do it. Park it in the back and operate out of that while that takes place. But time is definitively a factor. That makes me very nervous.
Yeah, you don't do it during tax season for sure.
No, it's gonna wait midsummer. Historically, September has probably been our worst month in the last 4 or 5 years. So that's kind of coming into mind a little bit. So we'll see.
Yeah, and he's right across the street from the original Shipley's Donuts.
Right.
We're gonna get some right after this.
We are. That is really cool.
That's right. Yeah.
It's bugging me. This is and I look across the screen here, and I think this is like your typical upgrade look. Like you have your worn down, beaten location with no hair.
Yeah.
You have your halfway upgraded location, then you've got Luke on the left here with fully upgraded hair
Correct.
on the top of his head. So this is kind of a fitting visual that we have for you if you're watching it on the YouTube channel.
That's too funny.
Right.
Hey, man, thanks so much for your time.
Absolutely.
Really
I
appreciate
you
it.
guys. Yeah,
If anyone has any questions or if they're in the area, can they stop by and see you?
absolutely. Stop by, say hello. We're at 3401 Ella Boulevard in Houston, Texas. Been operating since 1972.
It is a really, really cool location.
Really cool.
Really cool.
Thanks,
Garrett.
See you guys.
Thank you for listening. Please leave us a review. We'll catch you in the next episode.